Once upon a time in the bustling city of Tridopolis, three ambitious cocoa traders, Hannah the hedge queen, Ravi the risk wizard, and Sophia the strategy sage, found themselves in the middle of a cocoa market frenzy. Futures contracts were sizzling hot, spreads were shifting unpredictably, and margins were, well, thinner than a schnitzel. One fine morning, Sophia burst into the trading floor with a stack of cocoa market reports. "The spreads on cocoa futures are juicy," she exclaimed, waving the papers in the air. "But it's getting wild out there. Our trades are walking away with crumbs instead of steaks." Robbie smirked, glancing at the screen. "Thin margins, high risks. It's like we're cooking with fire here. Let's not get schnitzel smashed." Hannah, ever the sharp strategist, leaned forward. "If we play this right, we can tenderize the schnitzel spread. It's all about adjusting and readjusting as the market evolves." As the trio dived in, they noticed the cocoa market was teetering with increased volatility. Liquidity was pouring in at certain stages, creating opportunities, but also making entry and exit points tricky. "The key," Sophia explained, "is to watch the market's heartbeat. If we see a liquidity surge or a volatility spike, we tweak our levels." Here's their recipe for schnitzel success. Hannah analyzed the spread between spot prices and futures contracts. When the spread tightened below historical averages, it signaled a potential for upward margin capture. Robbie kept his eyes on trade volumes and rolling costs, ensuring they exited positions before additional costs ate into their profits. As volatility increased, Sophia recalibrated their strategies. If the market showed signs of breaking the range, she'd hedge portions of their positions to lock in some gains while leaving room for further margin improvement. Weeks later, while some traders were still reeling from the schnitzel slam, exiting too soon and leaving gains on the table, our trio was sitting on a feast of well-seasoned profits. Ravi raised his coffee mug, grinning. "Looks like we tenderized the schnitzel spread to perfection." Hannah chuckled. "No crumbs for us, just juicy margins." Sophia smiled, leaning back in her chair. All it took was careful adjustments, matching entry and exit points with the market's rhythm, and knowing when to let others take the risky bites. In the world of commodity trading, thin margins in volatile markets can feel overwhelming. But with the right strategy, like proactively adjusting entry and exit levels, monitoring liquidity surges, and staying cool under pressure, you can make even the tightest spreads meaty and profitable. In choppy, evolving markets like cocoa, avoid locking yourself into rigid strategies. Instead, actively monitor the cost of carry, leverage historical analysis, and keep tenderizing